Hey everybody, welcome to our seminar this week. We got a really nice seminar coming up, how to pick the right real estate investment strategies. We've been talking about all these different strategies for years and years and years now. What we decided to do is put them all together in one single seminar. Now we're going to touch on every single one, and everyone won't appeal to everybody. But what we like to do is give people the opportunity to learn about every single strategy so they can pick the right one that's right for them.
Yeah, it's perfect. We've got clients that have done every single strategy, and we're going to go over how they've made money and how you can make money as well.
How to pick the right real estate investment strategies, like I said in the opening, is all about every single different investment strategy that our clients are using and pretty much any real estate investors are using. Now, we understand you're not going to do every single strategy out there, but hopefully if you watch this seminar, you'll be able to pick and choose the strategies that work specifically for you.
Yeah, and the reason why we got our two little books at the bottom here, one is an ebook, 1 Million Reasons to Buy Real Estate, and the other one is Fearless Real Estate. We wrote that a couple of years ago now, Tim.
Yeah.
And it goes through a lot of these strategies. So if you want to take a deeper dive into what these strategies look like, we actually go over client success stories. You can see we've put a lot of our clients on the cover, and we did that for a reason, because we believe that you can understand these concepts, these strategies. It's not rocket science, but you do need people helping you through the different stages. So that's what we do for a living. And you know what? These books can really help you as well.
Yeah, you can see by this slide on the screen right here, we've got all the different real estate investment strategies that our clients are doing right now. You don't have to set it up like a wheel. You can set it up as a stacked number of items. You can do one, you can do two, you can do all of them if you want to. But what we usually tell our clients to do is find the ones that you are comfortable with and do the ones that are right for you. We're going to go over every single one in the seminar today. So anybody new out there who hasn't chosen a real estate investment strategy, they can find out which one is good for them. And like we said at the beginning, the reason we have our two books on the screen is because if you don't know which investment strategies you want to use, read the books, because you can find stories of our clients and the real estate investment strategies that they're doing, whether it's buy and hold or flipping or lease options or whatever. We have stories of them and we showcase their successes.
Yeah, one of the books is free, so that's even better. So before we change slides here, Tim, I just want to speak to everyone about how do we select a strategy for our clients? And what it really comes down to is when people come into our office, we sit down and work out where they're at financially, if they've been working for a long time, if they're self-employed. A number of factors go into it to work out, as we were saying on the flipping strategy, how many kids do they have? You know, are they handy? Do they bring something to the table? So all of these things come into it. How is their credit? If their credit isn't good, then we know, Tim, we have to go to alternative investment strategies. If it's good, we know then we can go to traditional strategies. But if, Tim, they want to get ahead and make money faster, then we go to a few different strategies at once. So there's a whole bunch of factors going into which way we lead people down to start off their investment journey. One thing I did want to mention, if anyone has any questions throughout the presentation, please put it in the chat. We can answer anything. We're pretty confident on that. We've been in this business a while. Okay, Tim, I think we're ready to
we're going to dive right into these investment strategies. The first one we're going to get talking about is the most popular one, buy and hold. Pretty much everybody who knows someone who has a rental property, that's the strategy they're using. When I first got started, it's the only strategy that I wanted to do. I branched out and did a few during my investing career, but it's the number one thing that I wanted to do. I wanted to gather as much real estate as I could and just increase my wealth that way.
So buy and hold, the key to it is picking the right property. If you choose the wrong property, and what do we mean by the right property? Really, you know what it comes down to is inventory in any market you're going into. So whatever community, whatever city, it really comes down to inventory. If there is a flood of rental properties in that area, then it's not going to be a good rental property. The rental yields or the rents are not going to increase that much. They're going to stay soft for a number of years until that inventory gets soaked up. That's why we are very nervous when people come here. We see it all the time.
Yeah.
They go into newer communities and they buy rental properties in newer communities. We're nervous because they're the first ones or areas to actually go soft in the rental market. And the other area that we would be a bit nervous about, well, over many years, Tim, is behind us here in the downtown market, because the Calgary downtown market got flooded with rental buildings, not just rental apartments. We're talking purpose-built rental buildings, and there's many of them in Calgary. There'll be many more coming as well. And when those buildings get released, those buildings could have 300 to 400 units in them that come onto the market. Now, they are a newer product. They're normally smaller and the rental rates are even higher. So if you have an older product, you know, talking about downtown, if you have an older product that is a bigger unit and rents are obviously going to be a bit less, you're going to do well. But getting back to buy and hold. Buy and hold is a simple strategy where, of course, you choose the right property. That is key. We've gone through that. But the whole aim of it is to place good tenants. Those tenants are paying more money than all of the costs associated with that property. So you're making cash flow. That is one rate of return. And then at the same time, and that is important, you should only be buying cash flowing properties, because we say it in our books, if you're not cash flowing, your days as an investor are limited. It doesn't matter how much money you're making. As soon as you have to pull money out of your back pocket as an investor, you know what? You would rather be taking the kids to Disneyland or doing something like that with that money. We can honestly tell you because we've been there ourselves. The second rate of return is the mortgage getting paid down. So we need you guys to understand that real estate goes through property cycles. Right now, we're pretty good on the cycle, Tim.
Yeah, so everything's going up right now, but there are cycles where it's either flat or even prices are declining.
Mm-hmm.
So your equity position, you might think, is declining along with this price decrease.
Yeah.
But as Ed was talking about, the mortgage paydown.
Yeah. So the mortgage paydown is a key factor, because when the market is soft and you own multiple properties, your mortgage is on average on a $400,000, $450,000 home. On average, Tim, is getting paid down, depending on the interest rate, even with higher interest rates right now, $800 to $1,000 per month. So if you have 3 or 4 properties and they're getting paid down, well, your net worth is actually going up $3,000 to $4,000 per month, because the mortgages are getting paid down, okay? And what we love about it is that when you buy a property, a mortgage typically goes for 25 years, and we know after 25 years, if you buy correctly, that the mortgages will be paid off. And if you just look at that return compared to what your RRSPs are making right now, that return will beat that any day. Right?
And the key point to that is someone else is paying that mortgage off for you.
Mm-hmm.
Your tenants are paying you rent, and that's paying down your mortgage. So what other investment can you get where you buy an asset and you have someone else pay it off? That was phenomenal to me to figure that one out. I buy a $400,000 asset and somebody else pays it off. It's unbelievable that you can do that.
Yeah, so the third rate of return in the whole buy and hold strategy. Now, we have to tell you, the buy and hold strategy is the most boring strategy there is, but it's the one that's going to make you the most money. We're going to be honest about that, because this magic thing happens. And the magic thing is, everybody out there, appreciation. We don't know when it's going to happen. We don't know how long it's going to happen for, but history has repeated itself. If you've read our book, you'll see that, you know, in certain years, we graphed it out what a price of a normal bungalow in Haysboro was, you know, in 2005, in 2010, 2015. Now going into 225, oh my goodness. I can tell you, Tim, that bungalow probably in 2000 was 250,000, and going into 225 will probably be 800,000. So, you know what? But once again, the reason why we support our clients and the reason why we keep educating them is because the market will go up and it will come down. But we're never worried about that, because if you look at the overall picture, and Tim, it doesn't even have to be 75.
Long term, the Calgary 75-year average for appreciation is 3.5%.
Yeah.
So that means on average, every year the prices have gone up 3.5%. Now that beats inflation, so you're well off, you're well ahead that way. But through the ups and downs, because real estate markets are cyclical, you're going to have ups and downs. There's going to be a steady increase of 3.5%. And we've also mapped that out. And in the last 25 years, it's well over 3.5%.
Yeah. It's right now, it's sitting at about 8, 9, 10, 12% for the last 10 years, Tim. So we're not even worried about that, because we want to tell you something, and this is very special because no one else is going to tell you this. When Tim and I got into business, we realized if we bought 5 properties at 400,000 and they didn't go up at all. Could you imagine they didn't go up? Okay. We knew after 25 years that those properties at $2 million worth of real estate would be paid off and be better than anything we could produce for a pension. Okay, at that time. So you know what? So if you have that in mind, we don't know where prices are eventually going to go, but you can do the maths. At 3.5% on a $400,000, say, townhome now, that property should be worth close to $1 million at 3.5% over 25 years. Now, we don't know if it's going to get there. It may not. If you buy correctly, I could tell you, if you buy close to downtown, it's probably going to get close to that. That's what they're going for in places like Vancouver right now. So who knows where Calgary is going to go, but we know it's a safe bet. That is the buy and hold strategy.
Yeah, so we're just going to touch on the pictures of all the people in these slides. The people in this slide, they are primarily buying their properties for long-term appreciation. You don't see a whole lot of flipping going on with these guys. They're just buy and hold people. And with every slide, we'll touch on what these people are doing and showcase that our clients are doing all different things. Okay, so the next one is flipping. And you can see in these pictures, everyone in here is flipping a house. They are the clients that, some of the clients that love to do this. For example, the couple on the motorbike, we've talked about them before. They just sold a house in Willow Park that they sold it over $300,000 more than what they bought it for. And their renovation costs were $70,000.
And the property they're behind right now, that was in Lake Bonavista. They made over $200,000 on that one. Now they're on their 3rd property in Parkland. And we just went to see their 4th property that they're thinking about closing on, to see how that one goes. So if you do it properly, the difference between us, if you're using us as your realtors, we run all of the numbers. So we actually put you on the budget. We tell you how much how much you can spend on the property. We tell you what should be done to the property. Like both these properties here, we suggested they needed en suites. Those older bungalows, like the couple above with the sold sign, they basically bought grandma's house. And grandma's house in Silver Springs didn't come with an ensuite. But we knew that that footprint over 1,200 square feet, I think it was 1,300 square feet, we could add an ensuite. And the reason why we wanted to add an ensuite is we know that anyone that's going to pay over $750,000 for a renovated property in, say, somewhere like Silver Springs, they would want an ensuite. So just simple things like that. And then we go through, Tim, what style of renovation should be done, what types of cabinets, what types of appliances, what types of countertops, backsplash, lighting's big now. And all of this stuff can be bought, which is hilarious. Some of it can be bought at IKEA. Some of it can be bought on Wayfair, we're seeing. People are getting really creative and doing very cheap renovations, Tim, which means they're putting more money in their pocket. So flipping, one thing we have to stress is if we're buying the flip property, there has to be a proven result of a flip property in that community within the last 3 months. So you don't want to go into a community and be the first person doing it. And there's no way we're going to let you do some sort of crazy design in the property. People want open plan right now. You're opening it up. At the end of the day, you have to appeal to the masses out there and create that wow factor or that emotional attachment in that property that people will just pay for. Okay. So,
and you need to have some sort of experience or wherewithal to be able to do some of the work yourself. It's very rare that someone could buy a house and flip it, having all of the work and all of the design and everything done 100% by someone else. That really, really erodes your profit. The numbers we threw out at the beginning of this slide, 300,000, 200,000 in profit. those numbers grab people. And they think, oh, that's what I want to do. I want to buy a house. I want to flip it and make $200,000. Well, the reason that these people made that kind of money is they brought something to the table themselves. They did a lot of the demolition themselves. They did a lot of the painting, a lot of the landscaping, a lot of stuff like that to keep their costs down. If you're going to hire it out to a company, that company is going to make most of the profit. So before you get into a flip, you need to know what you can bring to the table.
Yeah, you have to it's money too. We need to stress that. You need your money for a deposit. You need your money for your renovations, right? And you got to stay on budget. And we show you ways to do the renovations for free. We have a couple of programs that help our investors get the cash up front, interest-free, to take on these renovations if they don't have the money. And then the third thing we do with flippers or anyone getting into real estate, if they don't have the money, we actually put people together in our investment group, like Ryan on the top right-hand corner. We actually matched them up with the top left corner, Jeff and Susan, and Ryan came to the table. He's an engineer downtown, makes a lot of money, and he had cash. So he actually injected cash into the deal and became a JV partner and split profits in a project in Haysboro. So we put all of that together for our investors, making sure it's win-win and that the project is on budget and on time. And once again, if you haven't flipped before, we strongly recommend that you move into a property, you buy an older property, add value. This is the best way for any investor out there that wants to get ahead, because the whole name of the game on investing in real estate is getting your cash into a property, but then getting it back out by adding value, refinancing, taking that money and going to put it somewhere else so you can go again. Okay, so, and we're here to show you how to do all of that, and that's flipping. Okay,
the next one is house hacking. For those of you that don't know, house hacking is when you move into a house, preferably a suited property. You can live downstairs and rent out the upstairs, or you can live upstairs and rent out the downstairs. Now, a lot of our clients that do this are young because they don't have families, they don't have kids, they don't have a whole lot of external responsibilities. They can live in that basement by themselves while they're renting out the top to someone who's helping them pay their mortgage down. It's a great strategy to do, and these young people can repeat it over and over and over again. What we see with some of these guys here and gals is that they do it 2 or 3 times in a row, and then they've built up enough equity where they can start refinancing that first one or that second one to buy their bigger dream home. For instance, Cole down here, Cole and Natasha, they bought their first property in Canyon Meadows. They lived in the basement, renovated the basement. The top floor was already done. And then when they had renovated it, they moved out and they bought a house in Boneth, and they're doing the same thing again. But this time they're living in the top floor. Natasha insisted on it, and they're renovating the basement.
And you know what? We just looked today. Tim was looking at 2, were they legal suited in Boneth?
In Montgomery.
In Montgomery, 2 legal suited properties came on, $500 a piece. Cole bought his for $385. He's made over $100,000 just taking action. I mean, this is life-changing. These young people, you got Connor up in the right corner there. I mean, this guy is a legend. What he's done is he's gone out and he bought his first property, took action. Tim, how much was the first property in Ogden? $320,000
or something like that.
Here's a kid, $320,000, living at home, listened to us on our program here, went out, took action, had 20% down to put down, which made his numbers that crazy that he was living for free in his own place. Now, people, Tim, sometimes they're wondering, how do you make the numbers work? Connor actually decided to move into the basement. Okay, so if you want to get into investing, you can do it. And then you own your own place, and you should hear what happened next. He got people moving in upstairs. That covered his whole cost of living. Then he could save up for
5% down.
5% down on his next property, no problem at all. And the first property, Tim, how much did that go up in value roughly?
About 100,000.
And then the second one,
the second one, he bought a legally suited property, and that's gone up about 100 as well.
Yeah. So here's a young guy that only 3.5 years ago.
Yeah.
3 years ago was living at home, has moved into a property, moved out of that property and done it again, and is sitting on about net worth of $200,000 and can choose whatever to do next. Right?
The guy in the bottom right-hand corner, John, he did the same thing. He bought a house in Canyon Meadows, lived upstairs, rented the basement. Now he's on his second one in Fairview.
Yeah.
And he's got over $1 million worth of real estate because both of those are worth over 500,000 now.
Yeah, and you know what? John took action just 2 months ago on his second property. Tim, how much did you pick that property up in Fairview?
It was 520.
520,000. And you know what? It's a great property. It's just going to continue to go up. Properties in Fairview can flip all the way out to 650,000 in this market. So he's got a massive buffer to add value later on if he wants to. And you know what? This house hacking is real, and I think every young person should be doing it. Stop renting and move into your own place. And there's ways to get that mortgage. If you can't get it, as we said with Danielle's program tonight, how to buy with a friend. I mean, there's multiple ways you can buy properties, and we're here to help you move forward. And we're seeing these young people. One of my favorites, Tim, is this Lewis down here at the bottom. He's the guy with the glasses down the bottom. This is a guy that was following us for about 2 years. 2 years, and didn't really care about real estate investing. I don't think he really cares still, right? And he's like, oh, I just want to stop renting. And he had to stop renting because his lease was coming up. Yeah. He was only renting for about $1,100 downtown. We took him to Queensland, right? Queensland's down in the southeast. We bought a half duplex. It wasn't a great property across from the school. Nothing flashy. Had a beautiful suite though down in the basement.
Technicolor. Every room upstairs was painted a bright orange or a bright blue or bright green.
Go on our crew TV. You'll see the video because all the background's all red or something. It's bright. Anyway, this kid bought the cheapest place in Queensland. Tim, it was like $315.
It was very inexpensive.
Yeah, and right now that same property would sell for maybe $450.
Yeah.
So the kid has changed his life. He was renting, throwing $1,000 away, and now has made, with the mortgage getting paid down, probably over 150 grand.
Yeah.
Okay, so that's house hacking.
Okay, the next one, hard money and VTBs. We want to showcase this couple because this is Alejandro on the right there holding the book. He came to us and he wanted to buy a straight up rental property.
Yeah.
We found him a suite of property in Thorncliffe, and his intention was to fix it up and rent it out. Well, the market changed so much about a year and a half ago that he didn't even fix anything. He just rented it out.
Yeah, he didn't care. This is our Colombian family here. That's grandma visiting from Colombia. I mean, Tim, we just got him a property up in Edmonton.
Yeah, so this is what he's using the hard money for.
Yeah.
He wants to start flipping properties. So he was looking in Edmonton as well as Calgary. We've got a realtor up in Edmonton that works with us.
Yeah.
And she found him a property for about $330.
Cheap, yeah.
And he's using hard money for the down payment and hard money for the renovations on it.
Yeah.
So the neighborhood that he bought in, there are properties with an ARV around 650,000. So he's got $300,000 to play with in there. And he figures he can get the renos done for under $70,000 and be in and out within 6 months. So that's what he's using the hard money for, but he's got to do it quick because the interest on hard money is very, very high, and there's high fees as well.
Yeah, and because he's got equity in this property and the property he currently lives in, it's easier to get hard money. He's got equity where, we use a company called Calvert that lends our clients the hard money. And generally the interest rates, Tim, they could be up there. So we always say you have to be very, very cautious on what you're doing. The numbers have to be there for sure. And you have to have a plan, and you have to stick to that plan and be on time with that plan. So hard money, when people come to us, it's not for everybody. And if you don't bring something to the table once again, we would maybe talk you out of it and find joint venture partners instead, maybe. But hard money is a good option to get you in and out of properties, especially if the numbers work. Now, VTBs, this is very exciting because VTBs are going to come back. They've gone a bit soft here for some time. VTBs means vendor take back loans, okay? So basically what that means is the seller will give you financing. And what that takes is getting yourself out there, meeting sellers, and asking if they would take a VTB. And you know what? VTBs work for people that are asking a high price for their property and the property doesn't sell. This might be a shock, but I don't know what the percentage is now, but not all properties sell on the MLS.
Yeah.
Some owners are wanting a particular price. It could be a price that they paid for in a boom time, and that price just hasn't come back. And VTBs, what we really love about them is that you don't need the bank. The seller becomes the bank. So you still come up with a deposit, and then the seller will put their own interest rate on the remaining term. And there could be a balloon payment. You could structure it many ways. You could do 5 years, a 5-year term at 6-7%, and then at the end that money is due. So then what you would do then is get it refinanced from the bank, take the bank's money, pay the seller off, and it's your property. I have no problem paying more money for a property if the terms are right, Tim.
Yeah.
Especially if they're going to go up.
Yeah, and who's going to take this kind of deal? Well, there's going to be people that, they have an asset, they want a lot of money for it, they can't get it on the open market, but they will sell it to you if they're financing your purchase. So basically, you take out what you're paying them is a mortgage payment every month. The mortgage payment isn't going to the bank, it's going to the seller. So they're getting guaranteed income every month is what they want.
Yeah.
Maybe they don't want this big chunk of change. Maybe they're going to have to pay taxes on it. Maybe they own it in a company or something like that. But they will take this monthly payment because it supplements their income.
Yeah. Kiji's asking, is this the same as vendor-seller financing? It's exactly that. So you know what? The benefit to the seller, as Tim was saying, is that they're not paying a huge chunk of tax on the money when they sell the property. They're getting the money in installments. And a lot of elderly people, they're already financially doing well. So if they're getting a return on their money, this may suit them better, especially if they're on a pension. If it's going to wreck their pension somehow by earning extra income, this can shelter that extra income or shelter that net worth and just delay that really gratification or passing it on to the kids or those funds, whatever later on. So there's many reasons why a vendor would do this. Most of the times though, the vendor really wants their price. They're not getting it on the open market. You may have to look at Kijiji or Homes by Owner.
Drop flyers
to find these people. It does take work, but you can definitely do it.
Okay, moving on, wholesaling. Wholesaling is something that takes a lot of work. We'll say that straight up front. It takes a lot of work and you get a lot of rejection. But we do have clients that they did wholesaling for years and years and years, and it's very successful in a soft market. So it's not as effective in a market like now where it's super positive. The couple there, John and Donna, they actually had a whole wholesaling system going. They would print flyers. They would have somebody deliver them for you. And they're those little signs that you see on road signs or whatever, we buy houses, or you'll get those flyers in your mailbox that say we buy houses, no realtors involved, things like that. Those are wholesalers that are trying to not only help themselves out, but they're trying to help out the owners of these houses. Wholesalers generally go after houses that are a bit run down, maybe. The people that own them are hard up on their luck. What you basically do is you knock on a door, you get an interested seller, and you say, look, I will take over your house. I'll take over the payments so that you don't have to make your monthly payment, and you will allow me to make improvements to the house. And then after the improvements are made, whether it's a full-time renovation, whether it's small improvements, and you go to sell the house, the owner gets the original agreed upon price, and you make your profit that way. Yeah,
it's more of an income strategy for people out there, but you can make money and you could do this part-time. People actually do bird dogging on this too. So they may tie the property up and make a small fee when they pass it on to another investor to go in and make money. There is money to be made. And you know what? You're really trying to find those properties that people don't want to use realtors. They don't want to fix up the properties because they don't have a lot of money. And Tim, that's going to come back because interest rates are so high, people are going to run their costs through the roof. And then when it comes to selling, they may not have the funds available to actually make it all happen. So you know what? They would be looking at wholesalers to come in and do that. So you know what? It's one to keep a tab on. Don't go do an expensive course on these things. We've seen these courses sell up to $20,000. There is no point. at all. It takes you going out, as Tim said, getting multiple rejections because you're going to homeowners asking if they want to sell. But you know what? Someone may ring you on one of your flyers. You have to be consistent, and then you got to make the numbers work once again. Stay on a budget.
And what we do is for people who are very, very interested in wholesaling, we will help you guys get a system started, and we will help you as part of our services to get your wholesaling business going. Okay, moving on, land and development. Now, when investors have accumulated, more assets, more capital, they can move on to bigger things. Buying land it does not come without a lot of capital.
A lot of capital, because banks don't like to lend money on land. So you have to understand that. And so how do you get to this stage? First off, you normally own a few rental properties, and the whole aim is to get those rental properties appreciating and then refinancing or taking that equity you have to get into some of these deals. Jonathan here, last year, I think it was, Tim, with this deal, we bought 22 acres up in Bearspaw. He paid a lot of money for it. He paid $1.6 million for this land. He's going to subdivide it, I think, into 11, is it? 11, basically 2-acre parcels and then roadways. Yeah, 11. And they're now probably going to sell, Tim, in the 900 range, right? So there is huge profit in this, but there's massive outlay to subdivide those lots and to get utilities in there. I think, Tim, it was roughly $30,000 to $40,000 each lot
per lot,
just for the utilities. So you know what? And the time frame around this is a 2 to 3 year time frame. So it's not for everybody, but getting into development right now, it could be just as cheap as going out there buying property. So if you could build a fourplex, it would be something to look at, because you could legalize. We're seeing this now. You could legalize 4 units to have suites in them. So now you've got 8 units, and then those rents could definitely cover your costs. So that's an avenue to definitely look at as well. But it does take a lot of capital, generally minimum 35% down, and it takes time.
Yeah, so that's land development. Rent to own and lease options is the next one. We've got Paul and Daniel Kelly. Paul's the one with the red shirt, and Daniel's got the, let me just move this. He's got the sweater on. It's actually Paul, the guy in the red shirt, who has the rent to own program, and he's had quite a bit of success with it. What he does is he helps people with either bad credit or new to the country who cannot get a mortgage right now. He buys the house, they rent it off him with a contract to own it after a certain period of time, and they buy it at a pre-arranged purchase price. All along, they're paying rent credits, which is an amount on top of the rental amount. So, and they pay a fee at the beginning. So Paul is making an initial deposit plus the rent credits all along the contract, and then the agreed upon purchase price. So he's got a very good system that he's very successful at.
Yeah. So, the initial deposit from the tenants can anywhere be from $2,000 as low as $2,000, or we've seen it all the way up to $45,000. So, you know what, for an investor that's kind of struggling a little bit, that is looking for more cash flow, this rent to own could definitely be an option, because you can actually get a good deposit up front, and you could get the rent credits. And then hopefully in the end, the whole aim is to make sure that that tenant buys the property off you for an agreed price. So at the end of the day, the tenant's happy because they're getting a property that they're not just renting, they're wanting to own one day. And the landlord's extremely happy because he's getting a lot of money up front and continued funds, more than he would ever get just renting it out. So lease options are a little bit different from rent to own. Lease options is where you're going to go to landlords that are on rent faster, and they're trying to rent their properties out, but you want the right to actually have the ability to lease the property off them and buy it at the end of the term. We love lease options because you could get a lease option for under value rent per month on that lease option. So if it normally rented for $2,000, you may pick it up for $1,800, and you would have a built-in price with that owner at the end of it. And there's many ways to go about that to get the lease a little bit cheaper. And then at the end of the day, with lease options, you actually have the option to walk away from the deal or stay with the deal and purchase it. So
yeah, and the lease portion of it, why would a landlord go for that or a current owner go for that? Is because you're guaranteeing them those lease payments over the term of the contract. So if you have a 3-year term with the guy, you're paying $1,800, like Azad said, he's guaranteed that you're going to pay him $1,800 a month. Any vacancies that you have by subletting it, you're going to absorb that loss. So it's a very easy sell to the original landowner or homeowner, sorry. And then it's up to you to do the legwork to make sure it stays occupied.
Yeah, and it's even easier if he's using a property management company, because property managers charge 10% these days. So if he was renting for $2,000, you're taking on that management to make sure. Now, the thing with lease options, you have the option to sublet the property. So you can now turn around and maybe Airbnb it. You could actually have the ability, if you wanted, to add value to the property, or you could use it as student rentals. There's many things you could do. Student rentals right now are going for $1,000 per room. So there's many things you could do with the lease option, even with the rent to own or agreement for sale. There's many things you can do. But it is an option if you can't qualify for a mortgage to get ahead. Okay.
Moving on to BRRR strategy. Buy, rehab, refinance, rent, and repeat. This is our superstar guy.
Yeah, he's done like 3 in the last year.
Yeah.
So
we talked about him a lot in our seminars. We can go over the numbers at a later date, but he's made a killing doing the BRRR strategy.
Yeah. So buy, renovate, refinance, rent, repeat. I mean, this is the ultimate getting your money into a property and getting it back out. And we're doing it on condos right now. Graham's done 3 condos in the last year. He's making so much of a killing that he's mortgage free.
Yeah.
And you can check the video out on Graham on our YouTube channel so you can see if it's real or not. It's real. But the BRRRR strategy, you know what? I think if you have the time, you don't have kids like we do in sports every evening and we're running all over town. You know what? And you're young, you don't have kids, you could pull it off.
Well, Graham does have a kid, and the way he pulled it off, he's very busy and his wife's very busy. The way they pulled it off is they bought 3 units in the same building.
Yeah.
So you can do it on condos, you can do it in the same building, and you can do it within the same little tiny geographic area. So you're not running all over town watching contractors, making sure the renovations are going properly.
Yeah. I mean, this guy, he's one of the big managers for the Pomeroy group out in Kananaskis, and they own hotels everywhere. So he is very busy. You're right, Tim. But he pulled it off, and he didn't do extreme renovations, Tim. He did IKEA cabinets. He did new flooring, paint, and that was baseboards.
And a few light fixtures.
Yeah, countertops in the bathroom and that was it. So, and you were saying his light fixtures came from Amazon, right? So he made these units look really. We should go back and
we noticed these light fixtures. They were, recessed right against the ceiling. It's a condo, so you don't have a whole lot of room, and they were very contemporary. And we said, well, where'd you get those? He goes, oh, they were $10 a piece on Amazon.
Yeah.
So that's how you control your costs.
Yeah, and then his rents. The crazy thing is, his rents are crazy, like $2,000 a month for a 1-bedroom unit. And people are paying for it because it's a brand new unit in an older building. So it's a no-brainer, and he's covering enough that he's covering all his mortgages and his own mortgage.
So he's not paying a mortgage. It's covering him. He's living for free. Okay, next one, multifamily and commercial. This couple, Russ
and Diana.
We love these guys because they just take action. That's a fourplex behind them. It was illegal fourplex when they bought it. They legalized both suites, so now it's a legal fourplex. They're really into multifamily because they love the cash flow.
Yeah, they're at that age. They had started off in single family. If you're wondering how to get to multifamily and commercial, once again, you start off. You gotta swim before you.
Yeah.
What do they say? I don't know what they say. Anyway, they started off in just owning single family homes.
Yeah.
Those properties went up in value. They got the equity out, and then they put it towards a bigger purchase like this and more multifamily or commercial. So you know what? There is ways of making serious money in multifamily. The thing about Calgary, and we've been debating this for years, Tim, Calgary over Edmonton. Calgary doesn't have a lot of multifamily.
multifamily.
Small multifamily. Our city just wasn't built like that. If you go to Edmonton, you can drive through suburbs of only multifamily. So we're not built like that. So the multifamily here, Tim, it's more expensive.
Yeah, and commercial, when you start getting into commercial real estate, it takes a lot more capital. It's more capital intensive. You need to generally put 20–25% down. And when you're talking about a $2 to $5 million building, a small apartment building with 8 to 10 to 12 units, putting 20% down on that is a lot of cash. So what we see our clients doing is when they do get into commercial like that, whether it's an apartment building, whether it's a strip mall, whether it's a little industrial mall, they are doing what we would say joint ventures or what am I trying to say here? Syndication. Yeah. They get a number of people together, they all put up cash, they all put up their credit, and they buy these larger buildings. So it does take capital. People who come to us that are just starting out with real estate investing, we always steer them away from commercial because it does take experience and it does take a lot of capital.
Yeah. Okay, next one.
Student rentals.
Yeah, you know what? Student rentals are so popular right now because there's nowhere for the students to live. Like, it's crazy. At the beginning of the year, there's students living in cars just because they couldn't find a place. But Tim and I study the Ontario market a lot, and we always wondered, how do they make the numbers work? Well, we now know what everyone's investing in out there, and it's student rentals. And same as Calgary, you can get $1,000 per room. So if you're getting a good property, even Tim, if you're putting 20% down and you're buying in the $500–600, even up to the $700,000 range, and the property has 5 bedrooms, you can make the numbers work. So student rentals, they do take a little bit more work. You really have to lay the law on the students. We've got clients that just have female student rentals. That's all he puts in there. And you want to target, close to the university, close to SAIT, close to Mount Royal University as well. Within Tim, a bike ride or a short walk or a bus ride. And you know what? They're in demand, and you won't just get students, you'll get people that are new to Canada as well. We've seen that. But you just want to make sure that the common areas are spoken for because they get the dirtiest. And what are we talking about? We're talking about maybe the kitchen.
Near the entranceway or the bathroom.
Or the laundry area. So you really want, to help the students out and make sure that they understand how you want the property kept. And because it is a student rental, you should be visiting the property more frequently. Yeah, for sure.
This property in this slide here is, we took a whole bunch of clients on a tour of a student rental property that was for sale. It was quite messy in there. I think there was 4 bedrooms up and 3 bedrooms down. So you had 7 different people living in there. It made great cash flow, but we felt that the current owner or landlord was not paying enough attention to upkeep the place. He had done great work on the roof and the windows and the mechanical, but it was looking a little rundown on the inside. So we would just tell our clients to take more of a management role and make sure that these people who are renting take more responsibility.
Yeah, and you could go as far as putting in 2 fridges. We've seen that. 2 dishwashers.
We had a guy from Ontario send us a walkthrough of a student rental in, I think it was Guelph.
Yeah, it was Guelph.
He called it an executive student rental. So
I love it.
It was suited up and down. There was a kitchen in each place. There were 2 fridges in each kitchen because when there's that many students living in there, they have their own food and you don't want them stealing each other's food. There were 2 fridges. Each bedroom had its own ensuite. So that solved the problem of the shared bathrooms. And there was an extra freezer or fridge downstairs as well. So he called it an executive student rental, and he was charging each student for the room $1,300 per room. So if you buy something in the $700,000–800,000 range in those university towns in Ontario, and you set it up a specific way, you can charge massive rent and the student will pay it. So there are ways to do it.
And once again, you'd turn towards student rentals if your numbers weren't working. Like we always say this, if you're not cash flowing, you're not trying. So it does take more work, but you can do it for sure.
Okay, next one. Foreclosures.
Here's Julian and Audrey. This is a Silver Springs property. We bought this as a foreclosure. You can see the notice on the front door there. Unfortunately, an older couple got foreclosed on. We never know the story. The thing with foreclosures, you never know what you're going to get when you buy them. You're signing as is, where is contract, which means that the appliances might be gone or everything in the property might be gone by the time you get it. But 9 times out of 10, Tim, the properties that we've seen,
they'll be in the same condition as when you view it.
Yeah. So this property was really, really clean, but we had to advise our clients. They came to us to invest many years ago. Julian is actually our electrician that we refer to everybody. But they came to us and they owned a little condo in Silver Springs. At that time, the numbers weren't working to sell it. So we said, no, keep that, rent it out, and we will find you a good property. And they, of course, they wanted to live in Silver Springs. They chose Bowness, I think Montgomery, Silver Springs, and Ranchlands. As everybody knows, out of those communities, Silver Springs has the highest values. So we've seen this foreclosure and we walked them through the steps of buying this property. It went into multiple bidding at the courthouse. We told them what to pay for it. I think they only paid $520,000 or something like that for it. The property itself now, Julian's fixed it up. He's put a basement suite downstairs. It's probably worth close to $800,000. So
probably more than that.
Probably more than that, because big double car garage too. And this young couple, Tim, they've got 2 or 3 kids, right? They got lots of kids, 2 little kids, and they're just starting off. And as you can see tonight, all of our clients are all different backgrounds. We've got all ages. We've got retired people that invest their money on properties through us. So you know what? The thing with foreclosures, we were thinking we were going to see an abundance of foreclosures, but the numbers have actually, after COVID we're talking about, we thought we would see an abundance. And now with interest rates going up, for foreclosure to happen, it's normally after a year with the banks working out a way to try and help these people.
Yeah, and there's 2 things you got to remember with foreclosures before we move on in Canada is most of the provinces in Canada have a foreclosure rate of under 0.5%. So I think in Alberta, we're at 0.45% of all the mortgages go into foreclosure.
Yeah.
Now, why is that? That's because after the financial crisis in 2008, 2009, the banks really tightened up on their lending standards. And it's very, very tough to qualify for a mortgage. They don't just hand them out the way they did when me and Azad were getting properties in the early 2000s. It's hard to qualify for a mortgage. So again, it's hard to default on a mortgage because the candidates that are getting the mortgages are, a lot stronger financially. And the second thing about foreclosures is people think that it's like the American system of banking. You can there's lists of these things everywhere. There's not a list. So if someone says they can sell you a list of foreclosures or pre-foreclosures in Canada, there are no such lists. Basically, what people are doing is they're sitting in the courtrooms when these mortgages or these people are going in front of a judge to determine whether this house is going to sell or not. And they're picking them up then. It's a lot of work, a lot of time. Basically, most foreclosures go on the MLS system and they're sold that way.
Yeah, so with foreclosures, I was just trying to find out, I took a snapshot of the number of foreclosures, but over the last 4 or 5 years, the number of foreclosures actually dramatically dropped. And Tim and I were looking at the numbers and we're talking maybe 130 foreclosures this year to date, which is actually nothing compared to roughly, Tim, 2,500 listings coming on or on the market at any given time. So, you know what? We don't see that coming back. When they do come on, it is a process. Sometimes you can have conditions, sometimes you can't. So you really have to be wary of what you're doing and talking to your mortgage broker about that.
So moving on, Airbnb and pre-construction. Why do we have these 2 together? We have these 2 together because of this client. She went out and she bought a unit pre-construction in the waterfront in, I guess it would be Eau Claire. And so she bought a pre-construction, didn't take possession for like 2.5 years.
Yeah.
Because that's how long it took to build.
He actually came to one of our seminars. All of our seminars were in person before. We weren't on Zoom. Came to one of our seminars, loved what we were doing. We went out the next day, bought 2 properties pre-construction that were going to close 2 to 2.5, 3 years. And the reason why I wanted to mention 2.5 to 3 years down the road is we love that time frame. The more time you have on a pre-construction unit, normally you're putting as little as like 10 grand down sometimes on these pre-construction units, and then you're sitting on it and getting all of that appreciation for 3 years. I mean, it's awesome. It's not here right now, Tim, because there's not a lot of properties coming on.
There's not a lot of buildings going up.
So it will come back, and we were actually talking to developers in our office not long ago. We had the longest conversation about it, that it will come back and the developers will come back into Calgary, and we think that pre-construction thing's coming back. But she bought them purposely knowing that she was going to put Airbnb in these. Ran them, Tim, for I think 7 years or 8 years. We just sold one. She's got the other one still. We sold her other Airbnb up near Shaganappi Golf Course. But pre-construction is a way to get in and qualify later. So we believe in it now. There was a bit of time there, Tim, that there was too much property inventory.
A good gauge to go by is if you see, 10, 15, 20 construction cranes in the downtown area of whatever city you're in, that means they're putting up a lot of buildings. When those buildings are all complete, everybody's going to flood the market with rentals or Airbnbs. So if there are very few construction cranes and you can get into a building that's going to be built in the next 2-3 years, that's when you buy pre-construction.
Yeah, and one thing about pre-construction is buying in newer communities. We've seen this year alone. It's very sad that Ontario buyers are jumping into pre-construction out in the northeast
in houses,
and they've been buying, say, for 750,000, and now we can't even. It's not our clients, but we're seeing this on the market. Those same properties that were bought pre-construction for 750, they can't even give them away right now for 675. Yeah. And Tim, that is in the same calendar year, so it's not even been a couple of years. They haven't even taken possession, but they're realizing that they keep building out in the suburbs, and that the developers. So what happens in new construction out in the suburbs? If the developers aren't selling them, all they have to do is say, we'll include it in the price. You're going to get a finished basement, or you're going to get
and landscaping,
or garage, or something like that, right? So once the developer does that, and you've got no control over this, it decreases how much your property is worth automatically. So it's very, very scary when we see people do that. You really have to look at where you're buying and where you're doing it if you're in pre-construction. Now, moving on to Airbnb, we always say this: if you're not cash flowing, you're not trying. Airbnb can be the best way to cash flow. You just have to watch where you're buying. Some buildings don't allow Airbnbs. We just actually listed an Airbnb today. It's on Airbnb for 50% of the time, because the owner actually lives there 50% of the time and rents it out 50% of the time. And we listed it for $279. It's down in Seaton, next to the hospital. And Tim, what kind of clients was that?
So she was talking to us when we were down there. It's a townhouse in Seaton. And she was saying that because it's close to the hospital, she's renting it to doctors who come in and, are giving lectures, or they're coming in to work for a week to do a surgery rotation. She's renting it to families of people who are in the hospital. She's renting it to families or for people who are going into surgery, and, after their recovery period will be outside of the hospital, but they'll be close to the hospital. That hospital has created such an employment center that it's attracting people who need to go there, need to work there, who need to work around there, that her Airbnb was full. What did she say? 78% of the time?
Yeah, if she wanted it that. Yeah, right now it's at 50%, but
no, like the 50% that she rents it out, it's filled up 78% of the time.
Right. We always run our numbers off about 23 days out of the month, depending on which Airbnb we're buying for our clients. This one's obviously a very good one. It's generated $18,000 in the last year, and it's rented for, as Tim said,
probably 38% of the time.
Yeah. So can they make a lot of money? You know what? You don't have to spend a lot of money on furniture. You can actually find some of this furniture very cheaply online, or you could buy it at IKEA. You could buy it. We've got one investor that's renting furniture for his Airbnb. We didn't even know you could do this, but he actually rents the furniture. Everything in his Airbnbs are rented.
That night table is $5 a month. That lamp is $10 a month. And he listed off all these things. One other thing about Airbnb is you don't really have to own property to do Airbnb. Now that system of investing is called Airbnb arbitrage. It's when you rent out a property from somebody and then you make sure that you have the option to sublet it or lease it out again. And what you do is you put it on Airbnb and rent it out that way.
Yeah, we love that strategy. One of our clients has 17 of these properties. I think during Stampede, he made over $45,000. So, but you know, when you're doing that many, it's full-time work. He actually had to hire an assistant just to help him with all the bookings. So we help our clients do all sorts of stuff with Airbnb. And it could be for you as well. You could even be living in your house and Airbnb your basement, you know, just to make extra income. Okay.
Finally, legalizing basement suites. Well, it's part of a lot of different strategies, but what we do when we buy our clients properties with basement suites, we actually came across a legal suite today, and it was number 10,000 in the registry that the city of Calgary has. So we now have over 10,000 legal suites in Calgary. That didn't take very long to get to that number.
Yeah, that's awesome to hear. It's estimated that Calgary has roughly 30,000 suited properties in Calgary. So there's still roughly 20,000 that are illegal. And so the main aim of legalizing a basement suite is that you could do it with very little money. We've legalized basement suites with as little as $2,500. When we find properties for our clients, we make sure that it is easy to legalize, or we go through the steps with them, what has to be done. Not only that, we have a contractor that works for our clients and legalizes and goes through the whole process. And the thing about legalizing a basement suite, first, you're providing safe, affordable housing for people out there. Secondly, you're increasing your value tremendously. You could increase your value by 50, Tim, in this stage, $50,000 to $80,000 just by maybe adding a window or drywalling the ceiling or putting in smoke detectors. Some basements need very, very little. And we do this for our clients because at the end of the day, it helps them borrow more money. If your suite is illegal, the bank will only calculate one source of rent, normally the upstairs, and will disregard the downstairs. If it's legally suited, they will count all of the rents associated with that property. And that in return will help our clients buy more real estate. And they're doing it the right way, Tim. So legalizing a basement suite, we think it should be part of your portfolio. At the end of the day, it's going to help you cash flow. It helps you cash flow roughly 40% more. It helps you sleep at night. And it helps you buy more real estate.
Yeah, and again, legalizing a basement suite or owning a place with a legal basement suite, we have clients from all walks of life doing it, and it increases their cash flow. Daniel down here with the 2 bottles of wine, giving the thumbs up like that. You know, his kids have moved out already, so he's at a later stage in life. He wants something better for his retirement. So this property that he owns, he legalized the basement suite and he added it to his portfolio. He also owns a couple of townhouses that he's renting out. He did it with very little effort and he's getting ahead, even though he's at an older age.
Yeah, the kids on the left there, Brandon and Tiffany, I mean, they own, I think, 4 houses right now, Tim. And they're all got lit. They started off with legal. We bought the first one, that was legal. The second one we made legal. He went and done 2 joint ventures and bought 2 more. He's on his 4th property, one in Canyon Meadows and the other one in Acadia. And he has partners that are doing very well and love him right now because he introduced his friends to us and now they're all making money. So
the guy with the yellow appliances there, that's Mark. He's one of our favorite clients. Before we move on, you got to tell the story of buying that property with Mark.
Yeah, so this property's in Inglewood. We bought it for $425. It's actually a half duplex right near the river, and it's got 3 bedrooms up, 3 bedrooms down. And the stats on this thing are unbelievable if you were to own it, because you could do student rentals, you could do Airbnb, you could do straight up what Mark's doing straight up as a normal buy and hold rental. But when Mark's from Newfoundland and I'm from Australia, and the guy that was selling it, Seamus, who's a pretty popular, Seamus, pretty popular realtor in town. Seamus is Irish. So when I was doing the deal, Seamus couldn't understand me. I couldn't understand Mark. And at the end of the day,
it was these 3 guys using Google Translate. They're all speaking English.
But at the end of the day, we had to use text to get the deal done, and we managed to buy it. And to tell you the truth, Mark now is, I think he got offered. He was on here not long ago. He got offered like $650,000 for the damn thing. He's probably made now, with the mortgage getting paid down, the kids made 300 grand. You know, so. And Mark, he works up in Fort Mac on and off. And but the funniest deal of working in real estate, everyone speaks English, but we couldn't understand each other. We should just all go for a beer and then it can work. Okay, we'll wrap this up.
Those are the strategies. As you can see, there's tons and tons of strategies. People from all different walks of life do all different kinds of strategies. And what we want you guys to get out of this one is, even if you're doing one particular strategy, if you're not having any fun doing it, there's other strategies that you might want to do better. And it's worth exploring them. If you want to explore them with us, just give us a call. We can help you out in choosing the right one. Yeah.
So as we said, the best thing you could do is download 1 million reasons to buy real estate. We give you 1 million reasons. And it's for free. So download it. It's on our website, crewrealestateinvesting.com. Just go on there. You'll see it. It's a simple click. You download and you get it in your inbox, and away you go. The next thing is Fearless Real Estate. We wrote this to showcase all of our clients, what they're doing. And you know what? We did it because a book many, many years ago, we're talking like 23 years ago now, changed our lives. It was called Rich Dad, Poor Dad. If you haven't read a book, definitely read that one, because that will give you the motivation to actually take action. And then our book is really about how to take action, how people have taken action, what they've done, and then how you can relate to that so you can take action.
And it really ties into this seminar because it goes through a ton of different strategies that our clients have done and the successes they've had doing the different strategies. Yeah. It's not just one type of real estate investing, it's all types of real estate.
Yeah, it's and we tell the good and bad as we promised, okay? And it's not scripted what we're doing. The next thing we'll show you is our investment course. Now, we don't put this on you. You don't have to do it if you don't want to work with us, but plenty of people are doing this and they're having huge success. It's $97 a month. You can quit anytime. We never wanted to hold anybody, to something they didn't want to do if they didn't believe it. It comes with a whole abundance of stuff. This course, I've done a similar course for $17,000. Tim and I were members. Tim, I don't know how much you would have paid then. 5 years.
No, it lasted longer than 5 years. This course that we were part of, and it was $100 a month it went for about 8 years. And then there were all kinds of materials on top of that we had to pay for that we didn't get with the course.
So that would have been even more.
It was a massive amount of money. This one is very economical, and it teaches you every type of strategy out there. It's got all the forms, all the guides, all the examples. It's got everything you need to be successful in real estate.
Yeah, and you know what? If you can't afford it, but you want to get into real estate, book a meeting with us. We're going to get into that, and we'll help you make it happen. Like this is life-changing stuff. We're not just saying it; it's changed our lives. As you can see tonight, it's changed so many or every one of our clients. And if you want to see how it's changed their clients, go on Crew TV. You can Google it. It's our YouTube channel. As we promised you, it's not scripted, okay? We're not doing our hair in it. Maybe the sound isn't great sometimes, but the information in there is killer. You could actually see what these people are doing, how much money they're making, and you can see what types of properties you're getting. And if you can't join us every second Tuesday, you get market updates on there. You get property tours. You get case studies from clients. And then you just get to hear us, our investment tips of the week, or where we think the market's going.
And you get to hear from our clients and the success they've had. So you don't have to believe what we're saying. You believe what the clients are saying because they're telling the success that they had. And they're very, very sincere and they love what they're doing.
Yeah. So where do you go from here? Well, we hope you go to work tomorrow and you tell your friends all about us. If you enjoyed it, tell them to come on in 2 weeks. We'll have another topic in 2 weeks' time. Here is our contact details. Best way to get hold of us is to email us and we will return. We'll be happy to sit with you and understand where you're coming from, understanding where you're at and where you want to be. And our job is to get you there using real estate. We've done this many, many times. If you're sitting there and thinking you don't have the money, I mean, you might have heard some of our stories. We didn't have the money either, and some of our clients didn't, and they're killing it right now. And we want you to do this, because you know what, you need a plan B. You need to have something behind you growing so your future is more secure, or you know what, your short-term future is more secure.
Yeah, and in very, very uncertain financial times like right now, where the interest rates are going up, inflation's through the roof, what is a better thing to protect you than a hard asset like real estate behind you? That's why we suggest everybody have at least 1 or 2 rental properties behind them, so they can have that peace of mind and something to fall back on if hard times come along.
I got to have a quick shout out to Lisa Dougal. She is an Air Canada captain. I was on a flight the other day going to the lake. I just flew back in last night, and Lisa, I was so happy to hear she was our captain. So you know what? We work with all types of people out there: doctors, pilots, teachers, single mothers, retired people, Tim.
Yeah.
Don't let that stop you. We're here to help you take action, and we can't wait to work with you guys.
And we'll see you guys in 2 weeks at our next seminar.